Back in a day where we are looking at some profit taking in commodities, especially the crude oil prices, 4 to 5% down on your screens even now. And there are some major headlines behind that as well. To begin with, you have the U.S. getting ready to release major reserves from the Strategic Petroleum Reserve. 180 million barrels is what we hear. And then China lockdowns, the kind of move that we've seen in U.S. dollar, and the fact that you have OPEC meeting today and an IEA emergency meeting tomorrow. There's lots on your plate for the last couple of sessions when it comes to crude prices. Joining us to exactly talk about that is Peter McGuire, CEO, Exim Australia. Peter, hi. That profit-taking that's coming in on your screens right now, how are you reading it and what's your sense on what OPEC might do today? Will IEA join on a coordinated release mechanism with US? How are you looking at it?
Well, Manisha, first off, it's been quite a heavy sell-off as we've seen. And, it's approaching $100 for that Brent, seems to be ratcheting down. Also, US dollar index got pretty well hit to the downside. So it's been a very, very solid downdraft for the energy sector. Biden's comments, that's going to be interesting. You could see, as you mentioned, 180 million barrels in total, a million barrels a day. We're waiting for that announcement later today out of Washington. And also the other side, OPEC meeting, I don't see any surprises, IEA's comments and China lockdown. So, it could be a little bit of demand destruction out there. And Biden's got to do whatever he can to assist the consumer at $4.30, $4.40 a gallon.
So what's your sense, Peter? Where are the prices headed now? I mean, do you see a breach of 110? Do you see a breach of 100 yet again for NYMEX? I mean, what is the range we're working with?
Well, I take on board what Ed Moore said, Manisha, to you, that you're going to see these big swings. And yes, it's all about uncertainty, and the sentiment hasn't, changed out of the market. I think it's just whipsawing, and these big moves, you'll probably see it back at 110 for WTI in maybe over the next week or two. So I won't be surprised because the market keeps on surprising. As far as Brent's concerned, you might even see a 115 to 120 handle. So it's going to be quite volatile, and that is the excitement of the crude market.
It clearly is. And, it's a similar cycle that we've seen for metals as well. Monday was a day when you saw very sharp declines. Tuesday saw some buying. Wednesday, again, has been quite volatile. So when you look at each day, the volatility range continues to be quite widening there. How are you looking at an aluminum or a copper or a zinc for that matter?
Well, I'm looking at aluminium, Manisha, at 355. So, $3,550. So up the best part of 3.5%. And as you said, the whipsawing is just incredible. So if you're a trader, and that's what we're in, we enjoy those big price moves, and that's the excitement of the market, and traders are loving it. It's certainly a different situation if you're a producer and how you're hedging and all of those sort of things if you're an end user. So I wouldn't be surprised to see further uplift for the commodity sector as far as base metals over the short run, leading into that European summer, and continued demand increasing, I think.
So with the kind of first quarter that we've seen for metals, are you looking at further gains for the second quarter? Would you say that this sector is still a buy on all of these dips?
I think so, Manisha. I think that momentum will continue. It's been a dramatic quarter. This quarter's been just outstanding as far as price movement. So, I think that you will continue. I don't think you're going to necessarily see the dramatic volatility that you saw in this quarter, but I don't think the second quarter is going to disappoint from volatility and whipsawing and continual, uplift as far as prices. Could see, another 5 or 10% from here.